Let me tell you about the story of a borrower I was helping that was already under contract and went ahead and consolidated their debt. Now, spoiler alert, we did make it work, but not before I had a full-on panic attack. My name's Mandy. I'm a mortgage lender. I originate loans as my day job, and I make educational content on TikTok. And if you ever want to buy a house and get pre-approved, reach out. You can contact me. My info is in my bio. You may or may not know this, but my husband is a real estate broker, and I love him, and we work together as often as we can. He really likes to send me clients that are ready to write an offer but are not yet pre-approved. So he writes an offer for these people that, again, I have not pre-approved. I have had a conversation with them and I explained the importance of getting their documentation in to me and filling out their application as soon as possible. Long story short, they go under contract. I'm working backwards and coming up with the numbers for this house and then pulling credit and then collecting their documentation, and their credit was not what they thought it was. And their debt to income ratio was barely within the qualifying range, but I was like, I think I can make this work. So I'm talking to these clients and I'm letting them know that their pricing is going to be this because their credit is this. And they're like, why is my credit this? I thought it was going to be significantly higher. And I'm like, well, these are the accounts that you have open and these are the balances. You have 3 cards that are maxed out, blah, 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 blah. And they're like, no, we don't. We paid all those off. And I'm like, oh, well, it just hasn't reflected yet. That's great. Show me proof that you have paid them off and I can order a rescore. So they send me this proof that they've paid them off, and then they tell me that the reason why they were able to pay them off is because they took out a debt consolidation loan, and that debt consolidation loan had not yet shown up on their credit report. They send me the documentation showing that they've got this new loan that is not showing up on their credit report. Great, okay, go ahead and put that in. And oh my God, it blew their debt to income ratio out of the water, because what they did was they took out a personal loan that was going to be paid back in 2 years, and they consolidated about $30,000 worth of debt. Well, the monthly payment on a $30,000 loan was significantly higher than the monthly payments on their credit cards. Now, in the scheme of things, the debt consolidation loan was actually way better for them because it boosted their credit score tremendously because they were able to pay off those credit cards. And paying off your credit cards, as I've mentioned in many videos, can tremendously improve your credit score, but it impacted their debt to income ratio so much we had to get so very creative, but we did end up making it work. So moral of the story is that if you are going to consolidate your debt and you are really, really close to getting pre-qualified or pre-approved, have your lender pull your credit now and then have them help you determine whether or not consolidating your debt makes more sense. In some cases, people need the credit score boost and that'll be more beneficial. In other cases, people need a lower debt to income ratio, so keeping everything as is might be better.